that more and more people today are talking about impact investing. I started the Abraaj Group 16 years ago, and the intention was always to land up at a point where impact investing and mainline investing for returns came together in one holistic outcome. And so from the very first day that we started the firm, we were very focused on what at the time we used to call stakeholder engagement. And we used to say that, look, it's not just about generating shareholder returns, which are going to come because the opportunities in our markets are large. And we always called our markets global growth markets. You call them emerging markets. We call them global growth markets because that's where inevitably much of the development and the economic opportunity for the planet is coming from. But from the very beginning, when we focused on stakeholder engagement, what we realized was that it is not just about earning the dollar, it's about leaving the world a slightly better place. And by doing so in a part of the world where there is so much inequality and so much indifference to opportunity, that almost everywhere you turn, almost any business you look at, there is the ability to make a tangible difference in outcomes as well. So you don't actually have to compromise the profit imperative. You've just got to do a little bit more and work with people that are capable of doing a little bit more.
So just talk a bit about how that worked in practice as you started out.
So when you invest into a business, inevitably, you look at how the returns are going to be generated through value creation plans. You look at opportunities that are going to be generated through enhancing the sales cycle or whatever it is that delivers returns. At the same time, depending on the country in which you're investing, and we invest in 30 countries around the world, I think it's very important to remain focused on what the needs of that society are. Where is opportunity going to happen? So for example, if we were going to invest, as we did, in an electricity utility in Pakistan, we were very focused on creating vocational opportunities, focusing on doing the right things for the staff that were working inside the utility in terms of promoting health and safety, and then following that all the way through the cycle into forcing people to start paying their bills. Okay? That is also impact. Creating more socially responsible citizens, that's impact. Across onto the other side, let's go to Chile and Peru, where we invested in a travel business. And we realized very quickly that there were hotels and there were inns that were leading people up the road to Machu Picchu, but it is actually just as efficient to galvanize entire villages and turn them into people that could service the tourist on his way up in the quest. And by creating work environments and by creating opportunities for local families, we created the impact environment that enabled more and more revenue to be left in local societies.
And so, now, as you look at the world today, where do you see the opportunities to adopt this way of thinking most successfully?
Look, I think the challenges are both macro and micro. It's very clear that both are in place and both need to be tackled aggressively. Let's talk about the macro first. And it's very clear that the challenges that the world faces around inequality, the challenges that the world faces around climate change, and most importantly, the challenges around uneven access to virtual opportunity. These are things that are very, very important for all of us to tackle. And I think that impact investing is a fantastic mechanism to enable us to at least galvanize business into starting to think like that. Which brings me to the micro opportunity, which is business needs to redefine its social compact with society across the board, not just on a fundamental level of saying, should we focus on long-termism and not short-termism? Should we be redefining the way capital markets operate? But on a very individual level. And I'll give you a simple example that I like to quote, which is that if you walk into a supermarket in 5 years' time and you look at 3 bottles of water that you can acquire at exactly the same price point and exactly the same quantum, you will always, I think, pick the bottle from the company that you know is socially engaged in the community that you're coming from. And so you will focus on the business that is actually giving back a little bit more than it is taking away. And when you apply that to big businesses, more and more of whom are focusing on doing that, the reality check is that small businesses need to do more as well. And we're in an environment where actually for the very first time in history, young people have an economic voice that is incredibly disproportionate to anything that has happened in the past. So the millennial generation, which has got economic power and is thinking in a particular way, is becoming more and more empowered, and they are completely focused on impact investing.
And you see that globally, do you?
Absolutely, without question. And the other very interesting thing about the millennial generation that most people don't pick up is the fact that thanks to social media and thanks to this ubiquitous mobile device, they communicate with each other across the globe. And they have a higher sense of community than ever before. And people like you and me, Matthew, who grew up understanding and realizing the value of hierarchy, is something that they ignore, okay? And this, to me, is at the crux of how we should be redefining the way in which people like us who run businesses and run the thinking around business opportunity and the philosophy by which, let's say, impact investing is becoming more and more mainstream, we should be catering to their needs much more.
So how is that changing the sort of companies you're looking at?
I don't know if it's changing the companies we're looking at, it's changing the way in which we look at companies. Mm-hmm. And so, for example, from the very first day that we started our business 15 years ago, ESG was not a tick box. ESG was not something that was nice to have or would have been good to have. ESG has always been at the heart of how we look at economic opportunity. Because again, I always keep saying that if you want to build a great company, you've got to start with a good company. And a good company is not defined as good unless you embrace the norms that society has put forward as being the right things that we should be doing. We should be transparent, we should be governance driven, we should be focused on doing a lot more for society and for the objectives of the people that work within the business. And so if you start embracing that, what you realize is that you're not actually spending a lot more, you're actually not spending more at all, okay? But what you're creating is an enabling environment that enables more and more people to realize their ambitions of doing good things.
And so, I mean, is that changing dramatically at what stage you're willing to invest in companies, or the sort of places in the world that you're looking, or the type of entrepreneur that you're willing to back? Or?
Well, no, I don't think so, because I think that what is most important is to understand that whatever business you're about to deploy capital into, it has a need, it has a service beyond the immediacy of the profit motive, right? So let me give you another example to what I'm saying. Let's look at basic needs. Let's look at the fact that mostly families, irrespective of where in the world they find themselves, spend 80% of their income on 4 basic areas, which are healthcare, education, food, and housing, right? Healthcare, education, food, and housing. 80% of almost anyone, and I'm sure everyone in this room will relate to that fact as well, is spent on those needs. We are seeing, through technology, disruption happening today at a level unprecedented in terms of the way in which industries are being disrupted. Now imagine if these 4 industries went from 80% of a household's income to 60% of a household's income due to disruption. Would you not say that technology and disruption are the highest impact innovators that are out there? So what we have to do is take a very broad-minded view of what impact actually means, and be very clear that if you can change outcomes beyond the norm, beyond what we take to as granted, then we have achieved impact.
And are you making major investments in that kind of disruption in each of those 4 areas?
We are, and many investors around the world are, because I think that, for example, if you look at our impact strategy, we for many years did things along the lines of impact investing that is now becoming mainstream impact investing, but we never called it that. And about 6 to 8 months ago, we actually came to the realization that if we are going to lead the thinking in this field, and more businesses need to embrace it, then the first thing that we need to do as an investor into markets, and I'm going to give you a statistic not to try and impress you with the size and scale of the business I run, but just to give you an idea of how impact can be created. So I run a private equity firm that operates in 30 countries and deploys $10 or $12 billion in capital, but owns 200 companies, 180 companies, that collectively employ 500,000 people. Now imagine that number, 500,000 people, that private equity normally does not consider are its employees. They just members of a business that you are buying or selling, you apply some leverage and you sell them. We don't think like that. We think of those 500,000 people as our ecosystem. And when you start multiplying the impact that those people have on their ecosystems, you realize just one firm can have a rather large impact on the way businesses run across large markets. So we started redefining the industry in which we are as partnership capital. We stopped saying private equity. Because what a lot of people don't realize is that actually we're in the business of partnership. And partnership is at the heart of impact as well. So for example, we have a healthcare business and we have an energy business that we call impact businesses. And in our healthcare business, we're actually redefining the paradigm by which healthcare is being delivered across growth markets in Africa and the subcontinent by working through the middle class as a trickle-down effect and a trickle-up effect, and creating the maximum amount of impact in cities and countries that actually didn't have healthcare to start with. So for example, if you take a city like Lagos, 16 million people, 4 cath labs. London, 10 million people, 145 cath labs. So if you can put down cath labs in Lagos, and you can do it efficiently, effectively, at low cost, and with outcomes that are driven by social good and the profit motive, what you're going to land up is everybody lands up in a win-win, and you have partnership capital working at its best.
Now, we earlier touched on the social development, the sustainable development goals that the UN has just adopted. I mean, do you see that as a useful framework?
Absolutely, yeah.
In what way?
Because I think the Sustainable Development Goals are our best effort at defining what we as a society today consider to be the biggest challenges that we as a planet are facing, okay? And when we take them in their entirety, if we can solve the Sustainable Development Goals, we actually leave the planet as a much better place than we started off before they were defined. And I feel that all of us, in this room and outside this room, people who run businesses, people who run NGOs, people who run government policy, must really focus on the fact that every single entity can contribute towards meeting, developing, and enhancing our reach towards ensuring that the Sustainable Development Goals are met.
So how do you take the goals and turn them into investment strategies?
So we do that. We're right now as a business focused on 7 of the Sustainable Development Goals, and through our businesses such as the healthcare and energy businesses that I'm talking about, we actually, when we define the nature of the investments we make, we look at the impact that this will have, those businesses will have on alleviating and meeting the targets in the Sustainable Development Goals. And we operate in markets where it is so stark, it is so black and white, and it's so apparent that it becomes an imperative as well to be able to go in that direction.
I guess a lot of people who look at the likely growth projections for the next 25 years see a massive continuation of the trend to move into cities. You already talked about Lagos as one example. Do you think city strategies are a key part of impact investing?
Yes, is the short answer, and the long answer. We have to remember, and the world is changing in ways and means that sometimes we comprehend and sometimes we don't comprehend. We're now beginning to comprehend what it means to have an America under President Trump, which is that we cannot comprehend what it means to have an America under President Trump. But at the same time, what is an undeniable fact is that mankind is becoming an urbanized race. More than 50% of us live in cities, and we're moving into cities at a rate equivalent to 8 New York cities a year. And if we believe that development is going to come from these so-called emerging markets, and the fact that the IMF says that 2/3 of global growth in the next 2 decades is going to come from these markets, the reality is there are 400 cities in those markets that is going to drive the majority of that growth. So I'm a big believer in the fact that it is cities, not countries, that are going to be driving economic growth. And when you have these new cities coming up and you have opportunities in these cities coming up, it is both good and bad. On the one hand, you can invest into the infrastructure of cities, and almost anything you touch, whether it's logistics, healthcare, education, financial services, consumer goods and services, and I can keep going on with that list. There will always be an investable opportunity within urbanization that is going to land up helping you make money. But at the same time, cities give rise to slums. Cities give rise to inequality. inequality. Cities give rise to people that feel dispossessed, and it is very important that businesses that go into developing opportunities in cities are aware of that, alert to that, and can make an important role in alleviating that.
But when you use the term partnership capital, do you see partnering with city government as a part of that?
I think yes, because the way cities are growing, this is an undeniable fact. So for example, if you look at Indonesia's growth rate and you peg it at 5% annually, that means that Jakarta is growing at 10%. You can say the same analysis in Istanbul in Turkey, you can say the same analysis in Lagos in Nigeria, and most of the countries around the world that I inhabit and my business invests in. So without question, you cannot actually bring to bear large amounts of capital without taking partnership opportunities with the city governments into account. And more of these governments are open for business. They're very open to speaking to people in this room, to speak to people who are deployers of capital, and say that if you put capital into this realm, then the brakes for you in realms A, B, C, and D will become clearer and better as well. So the answer is very much yes.
Now you mentioned the incomprehensibility of the new American administration. And I guess if one looked at the financial markets over the last couple of years, and certainly the last few months, the money, particularly from American investors, has been increasingly coming home and focused on domestic markets. Emerging growth markets have been struggling to get funding. I mean, I guess you're going to tell me that that's a mistake, and and that the real opportunities still lie in the growth markets. I mean, do you think that's the case?
I'm not going to entirely agree with you because there are two very different pockets of capital that you're referring to. One is the public markets, and yes, in the public markets, what you just said holds, because the public markets are very much a function of globalized capital flows that move in and out depending on where opportunity is perceived in the immediacy of the here and now. And there you have a much more focused approach on moving capital around depending on how interest rates are going and so on. So more of that money as US interest rates rise is going to come back into the US, and more of that money is going to be deployed locally. But there is another pool of capital, which is American pension funds, American endowments and so on, that actually are increasing their allocation to emerging markets and private equity. And the reason for that is very simple. Public markets do not reflect the economic reality of those markets. Public markets are essentially representative of a scenario where 10 to 15 companies dominate 50 to 60% of exchanges in individual markets, and they are not reflective of the true drivers of economic opportunity in those markets. So if you want the alpha, if you want the return, then that is going to only happen through private capital, and most large US investors are cognizant of that and are deploying capital into it.
So you're finding no lack of interest?
I'm not finding any lack of interest, but there are certain countries, of course, that are going to be impacted by US policy. The example that most starkly faces us is Mexico, where we have a pretty strong presence. I keep telling my colleagues there to look for construction companies because we'll soon be building a wall. And I'm hoping that if they have to pay for it, at least it'll be their own construction companies.
Is there any, as you look at what and try and comprehend this new administration, I mean, are there other areas besides Mexico that you are worried about? Are there any parts you're excited about?
No, I think, when you're in the US, you tend to worry a lot about what is happening in the US, and you focus a lot on the immediacy of the day-to-day drama that you see being played out. But in the rest of the world, let me tell you, it's not being impacted. And the reality is, there's one very basic reality. Let's take India, for example. There are 1 million young people that turn 18 in India every single month. Every single month, 1 million Indians turn 18. Now, what that actually means is that they're coming into a working environment full of hopes and aspirations. They're looking for jobs, they're finding the jobs, and then they become part of the consuming classes. Now, these people actually don't care what's happening elsewhere in the world, because they're working for businesses that are growing in India. They're working for businesses that are developing as a result of India's trade relations with the rest of its environment. And so, for example, Matthew, South-South trade today is higher than it has ever been. And that actually is a byproduct, not an outcome, but it's a byproduct of globalization, and is one of the things that is going to keep those markets on an upward trend and trajectory for a few years to come, whilst you sort out policy within the US. And at the same time, I have to tell you that although the US will not be investing aggressively overseas, it appears, there are other countries like China, through their One Belt, One Road policy, are actually beginning to occupy that vacuum and very aggressively growing out their investment and deployment schedule. And interestingly, very focused on impact investing as well.
In what sense?
They are cognizant of the fact that they need not just to deploy capital, but to have an engagement beyond the relevance of returns. They are working with elements of civil society in most of the countries where they're working. They're creating jobs. They're creating an awareness around the fact that you have to build businesses with ESG compliance and so on. They're investing into think tanks in these markets that promote this. So it's quite interesting what's happening out there as well, as one country begins to flex its muscles and another one starts to look inwards.
So besides India, are there any other countries that you're particularly excited about at the moment because of the growth opportunities?
Well, if you give me the liberty of drawing a sort of paintbrush across these markets, Vietnam is a very, very interesting opportunity, as is the Philippines, because these are both markets that are emerging into finding their feet and have spent a lot of effort over the last few years getting their governance systems right. I think Pakistan is another market which is increasingly being looked at by investors as a stable economy, and therefore the opportunity is good. I think that despite the headlines that you keep hearing and reading on CNN or Fox News around Egypt and Turkey, these are markets that are thriving and growing. We just invested in a dairy business a couple of years ago in Turkey, and people ask me, well, why are you putting capital into Turkey at a time when the fundamental political situation is so nuanced and difficult? To which my response was that the Turks are going to drink milk irrespective of who governs them. And that's just a reality, that the economic opportunity in these markets is growing in leaps and bounds. You look at the Pacific Alliance countries of Peru, Colombia, Chile, and Mexico. 3 of the 4 that I just named are on a growth trajectory. So there is a lot of opportunity in these markets, and the more investors that focus on these markets but do so in a nuanced manner and actually compel either themselves or those that they deploy capital with to focus on impact as a key corollary towards deploying capital, I think we'll all be in a much better place.
And lastly, we're almost out of time, just one piece of advice for us as we're thinking about this mainstreaming topic. What is the number one priority if we're going to mainstream that way of thinking?
Let's get the measurements right. Let's get the measurement parameters right. Let's get the assessment parameters right. And let's understand that it is not a narrow definition of impact that we need to work with. There isn't a textbook analysis that can be put forward and said Impact 101 means that you achieve the following 7 outcomes. Impact investing is about making a difference. Impact investing is about making a difference in the way you operate, in the effect you have on the people you operate alongside, and it is about doing the right thing. And doing the right thing is very easy to judge. You don't need science to help you.
But you do a lot of metrics yourselves.
We do. Yeah. Because it's very important to be able to measure and to be clear that what you're actually doing normatively has a positive outcome.
Great, and you're optimistic?
I'm very optimistic. I think the world is a great place.